Welcome back everybody to another YouTube video. So in today's video, I'm going to talk about how I simplified my day trading over the last 7 years. So a lot of you guys may or may not be familiar with my journey. My name is Raul. I've been day trading for the last 7 years and it has been my career since day one. Day trading is something that I dove into and never looked back, giving my all 101% effort from the very beginning. And I definitely could say I've gone through a very big learning curve when it actually comes to day trading. And I want to show you guys how I simplified my day trading over the last 7 years. Now, to be more specific, when it comes to my journey and my career overall, there was a lot that I had to learn on my own. I didn't necessarily want to say that it was like super easy and handed out to me, but nowadays with the resources I'm providing you guys, I'm giving you guys a really good foundation on how you can actually not only get started, but increase your profitability in the markets. So some of you guys may or may not already know how I got started into day trading. And when it came to my trading career, started off with very small live accounts. And I was just constantly trying to flip those accounts. And I was constantly refining my trading strategy. That's one thing that is super important and one thing that you have to understand when it comes to day trading. It just comes down to constant refinement and constant looking at your own performance. And again, day trading is a career where if you go into the markets and you make mistake after mistake and after mistake, and you don't improve from making those mistakes are going to cost you hundreds, if not thousands, if not tens of thousands of dollars. I want you to put into perspective that you are the CEO and the owner of your own day trading business. You are going to be the sole individual that is going to be responsible for your cash flow. Not only your cash flow, you're going to be the sole individual who's going to be responsible for your P&L as well in terms of profit and in terms of losses. So I want you guys to take this video very seriously. When it came to my day trading in the very beginning of my career, I was focused on trading multiple different strategies at the same exact time, really just trying to find out which strategy worked the best. And one thing that I was notorious of looking back at it was actually just strategy hopping, be trading one strategy. Early on, I would be winning trades, and the minute I start losing trades, probably after like 3 or 4 losses in a row, I would immediately hop over to the next strategy. And that is what I would like to call the circle of doom, because one thing you have to understand about a day trading strategy is although you may have a 70% win rate in the markets, let's call it, which is typically very high, you're going to go through a losing period. Now, not every single strategy is going to look like, hey, you know what, out of my last 10 trades, I won 7 and lost 3. With some trading strategies, and depending on the market conditions and depending on the system you're actually trading itself, you may actually win 4 or 5 trades in a row, lose 7, and then win another 10, 12 trades in a row. And that'll come up to your 70% win rate, just throwing out random numbers out there. But just to give you guys an example, it's not always black and white. So this is one thing that I had to stop early on. That was one big mistake that I was actually making, is I thought, hey, you know what? This strategy is supposed to win 60% of the time. I just took 5 losses in a row going over my 60% win rate. So this strategy clearly doesn't work. I'm going to move over to the next strategy. When that's not really the case, because even if you have a trading strategy that wins 50% of the time, you could still lose more than 5 trades in a row, depending on your trade volume that you've had over the last few days, few weeks, few months, etc., and still falling with that 50% win rate. So that's one thing that I want you guys to just keep in mind. This video is going to be mainly tailored for, I don't want to just say people who are already experienced in the markets and have already started trading. It's definitely for beginners as well, but it's really just to kind of get a general broad range and to get you guys to understand that this is the route that I ended up taking on how I really simplified my day trading in terms of business structure, because day trading is a business and needs to be treated such as, and how I was able to actually turn a lot more profit just simply by following this one simple trading structure that I have. So I made a quick flow chart for you guys to understand this. Now, don't blame me, I'm not a professional at making flow charts, but I want you guys to understand the structure that I have built overall that helps me not just simplify my day trading, will help me simplify my day trading, will help me become more of a consistent trader and a more profitable trader. Now, one thing I want you guys to understand as well is when it comes to day trading and when it comes to the word consistency, that doesn't necessarily mean that it's only looking for consistency in your P&L. You have to have a consistent approach to the markets every single day. And there's times where I'll fall off my level of consistency, where I'm not having the same approach to the markets every single day in terms of trading routine, trading structure, journaling, or maybe even trading the same exact way I normally would. And I have to reset myself and take myself back to those baby steps and refining my consistency and finding my consistent approach to that market. And then that's ultimately what's going to come to a better outlook and better performance, which is one thing I want you guys to keep in mind as well. Consistency does not necessarily mean it is only reflected in your P&L. You have to be consistent and have a consistent approach outside of the markets and how you approach the markets and your trading business, because again, this is a business, and then that will reflect into consistent P&L in the long run. I want to say in the long run because it's fine and it's normal to lose X amount of trades in a row, as long as it's within your typical parameters of whatever strategy you have. If you backtested a strategy, you backtested 500 trades over the last few months on that specific strategy, and you say, hey, you have a 70% win rate, and you start to fall off of that, then you really have to start to analyze what you're doing wrong, which is one thing that is huge. But without further ado, let's get right into this flow chart. So typically everybody's going to come into the markets and start learning technical analysis almost right away. At least that's what I did. So I'm speaking from personal experience here. And that's of course not mentioning all of the beginner topics and really just finding out what the markets are, how to day trade, softwares, etc., etc. Right after that, you dive right into technical analysis. And a lot of people really focus on technical analysis. But one thing I want you guys to keep in mind, to be specific, is technical analysis. Informing technical analysis is a skill that you can actually develop over time. It is a skill that is developed with experience, constant application, and constant studying. So if you guys could just constantly study the charts, back test, forward test, and live test, then you over time will become a more experienced and a better technical analysis and be able to perform technical analysis better, which is why I have technical analysis here as first. So really, you're just building the foundation of your overall technical analysis. There's a lot of different concepts to trade nowadays. You have quarters theory, you have harmonics, you have there's a lot of different concepts to trade nowadays. You have quarters theory, you have harmonics, you have smart money concepts, which is why I have the foundation of technical analysis, because everybody's foundation of what technical analysis actually is going to be very different. So what I mean about the foundation of your technical analysis, it also ties down to the instruments you're going to be trading, the time frames, your pre-market analysis, your active trading times, your post-market analysis, and even your trading capital. All of that is essentially the foundation to your trading business and your trading system. And then you have your technical analysis. It doesn't matter if you're trading key levels, it doesn't matter if you're trading order flow, if you're looking at the heat map, footprint charts, if you're looking at the DOM, the tape. It doesn't really matter what you're doing, that's all the foundation. So after you've identified what your foundation is, and this is why I'm telling you, like, this video is a little bit more tailored for people who already have this. If you don't have it, that's fine. I just gave you a ton of key concepts that you could look up. And you can even go into my YouTube videos, my previous YouTube videos, and really just look at what my personal foundation is, which to give you guys an example of what my foundation begins with. Typically, it's really just trading either like equities or futures. I have my pre-market analysis time, which is of course roughly around like 8:40, 8:50 to 9 a.m. My active trading time is between 9:30 to about 11:30 to 12 o'clock. And then my post-market review is at the end of the day, 6, 7 p.m. at night when the market is already closed. So after that, my foundation of my technical analysis and how I approach the markets every single day, it's really following a top-down analysis approach. So I'll start off on the daily time frame and work my way down, identify where price action is trading, what price action has done in the overnight session, and where we could potentially go, while also looking at the candlesticks and performing candlestick analysis as well, because technical analysis, candlestick analysis are two different types of analysis. Then I'll work my way down to the lower time frames, such as the 4-hour, the hour, the 30-minute, the 15-minute as well. I'm going to be identifying the higher time frame trends and identifying the lower time frame trends. Are the higher time frames in a bullish trend? Are we moving sideways? Are we trending bearish? Then on the lower time frames, okay, well, if the higher time frames, let's call it, are trending bullish, but the lower time frames are trending bearish, it's most likely going to be some form of a counter trend that we're seeing right now. And can we possibly see a trend continuation? Then I asked myself the question, okay, well, if we're going to see a trend continuation, where could we possibly continue the trend? And then I start to identify the key levels. I would be looking for bounce plays, which again, I'm kind of pushing it a little further, but just to give you an example of my foundation and the overall view that I have to the markets, the approach I have to the markets, it's like, okay, well, we could look for a bounce play at this level and this level. Then I go over to the heat map. I look at the heat map. Okay, well, at these two levels, we have resting liquidity at this price, and then at this level, we actually have resting liquidity a little bit lower than that. And then I plan to say, okay, well, if we have enough aggressive selling, can we approach that area of resting liquidity and will buyers step in at that resting liquidity, or will sellers out strengthen the buyers and push price lower? And if, keep in mind, it's a big if and then thought process. And if that happens, where can I start looking to participate on a short if these longs don't end up playing out, or if my longs don't end up forming my possible plays? I know it was a little bit long, but that was a quick rundown of my approach to the markets every single day. So after you have your foundation of your technical analysis, what you're going to be doing is building a playbook. And just like a football coach has a list of plays for his players, you're gonna have a list of plays of the trade setups you're gonna be looking to take on a daily basis. Now, my technical analysis is very discretionary depending on the market conditions, of course. But one thing that is consistent in my trading system and my trading strategy are these setups that I'm taking on a daily basis. So what I want you guys to do is build a playbook. And all it is a list of your trading strategies that are all named and order from your favorite strategy you take, which could be like a strategy that you spot right off the bat, right away. You don't even have to think about it. You can already spot it, versus your trading strategy you may not like trading the most. Now, for me personally, when it comes to my breakout strategies, I don't really like trading breakout strategies too much. There will be times where there's high volume where I will take a breakout setup, and I have my list of breakout strategies, which is typically just 2 different breakout strategies that I trade on, I don't want to say day-to-day basis, but it just really depends on volume. Those strategies I don't trade too often because I need to see that there's a lot of volume in the markets. Not only that, those are the strategies that I actually take size off of the table, which is why I'm telling you guys, when you're actually making your playbook, put your favorite strategies at the top. Those are typically the really high probability setups that you're able to spot relatively easily. So those are typically the strategies that you're gonna size in on. Now, everybody's gonna be very different. Some people like that very linear growth in their equity curve. Other people like that explosive growth, such as myself. And the way to get that explosive growth in your equity curve is by sizing in on those really high probability setups and then taking size off of some other setups. So for me, the trading strategies that I have at the top of my playbook that I look for on a daily basis before my breakout strategies are going to be my bounce plays and my breaks and retests. So those are typically strategies that I actually size up on. And then my breakout setups, I typically take size off the table, which is why I like to list my trading strategies basically from an order of my favorite to my least favorite. Not only that, but when you actually have a list of your trading strategies that you could see from your favorite to your least favorite, you also want to look at which one of your strategies performs the best. And this is where we have our actual playbooks themselves marked up. So after you have your list of strategies that you have, you want to actually name every single one of these strategies. And all of that is going to go into your journal, and within your trading strategy, the name you give it. So for me, for a bounce play, for example, I need to have my exit criteria, my entry criteria, my trade management as well, and how I typically manage the trade once I'm already in the position. So to give you guys an example, with my bounce plays, what do I look for? One, I need to identify if price action is trading at a key level. That is number one. Let's say you have 5 different criterias or 6 different criterias that you have for an entry criteria. What you want to do is identify your top 3 and always look for your top 3. So for me personally, when it comes to a specific trading day and I'm looking for my top 3 criteria, if I only have 2 or maybe 1 of those criteria met that are my top 3 favorites, but I have my other 2, that's a trade that I'm going to take size off. But if I have all 3 of my favorite entry criteria right there in front of me with my setup, that's typically a sign for me to size up on that specific position out of, let's call it, my 6 entry criteria. So to give you guys an example, my 3 favorite entry criteria is number 1, we need to be trading at a key level. Number 2, I need to see a rejection. And then number 3, I need to see some form of absorption or some form of a buying imbalance. And then I have other entry criteria such as aggressive buying or selling in the opposite direction. And I say this in the opposite direction, but you know what? To make things simpler, what I'm going to say is I'm looking for a buy in the situation. So if I'm looking for a buy in this situation, what I'm going to want to see for a 4th entry criteria is going to be, I want to see aggressive selling past my key level where there's new sellers trying to step in, but then we see a failure and a follow through of those new sellers actually stepping in, leaving us with a rejection candlestick. Typically, if we see that and I see that selling imbalance is above the support range, or in that case at the support range, then I'm going to want to see a retest of that imbalance, which is another entry criteria, just to be listing off random examples for you guys. But at the end of the day, I want you guys to just grab the foundation of what I'm giving you here and personalize it to yourself. And then you're going to have a list of exit criterias, whether it's low volume, whether it's the RSI is overbought, oversold, whether it's a R multiple perspective, whether it's you hit your take profit. You want to have a list of exit criterias. And then on top of that, you want to have a list of how you're actually managing that specific trade. Are you moving your stop loss to break even? How are you continuing to trail your stop loss? Are you moving your stop loss based off of points, based off of pips, based off of our multiple? Are you trailing your stop loss based off of structure? Are you trailing your stop loss based off of the candle closes? And if so, what time frame of the candlestick closures are you trailing your stop loss based off of? So all of these different criteria need to be listed for that specific play. What this is going to allow us to do is go back into our results, look at the last 30, 40, 50 trades that we've taken, and see what our highest ROIs are with our criteria for that specific setup. And then we're able to see what setups perform the most. So not only are we able to identify what plays of ours perform the most, we're actually able to see, once we go much further in depth into that, which one of our criterias perform the most. So when we go back into our results and we look at our criteria and I see, hey, you know what, my top 3 criteria for the entries are actually met right now, on top of the lower timeframes and the higher timeframes both being in sync. And this is a really high probability setup. This is going to be a setup I sized in heavily on. So this is where I was able to really get that explosive growth. And really, this is where you saw me make that $104,000 payout on FTMO, because I was following this system of really just sizing in heavily on my high probability setups and taking size off of my lower probability setups, and then managing my trades appropriately. And then all of that is going to lead back into your trading journal, which again, inside of your trading journal, not only are you going to have the foundation of what your technical analysis actually is and how that's explained, you're going to have the times you're going to be trading, the instruments, and pretty much everything that we discussed earlier in this video, along with your playbook and the list of all of the plays. So again, for me, you have the bounce plays, then I can have the break and retest, then I could have the breakout setups. Or for those of you guys who maybe trade moving averages, hey, you know what? You can have play B instead of it being play B. We can have a MA crossover setup, or we can even add like a VWAP bounce play setup, VWAP bounce play. There's endless amounts of opportunities that you can have. What I'm showing you guys today is structure. You need to have this structure so you can approach the markets consistently, and then you can not only refine your trading system, but you can refine it with effectiveness. At the end of the day, that's what's going to be ultimately the most important goal, is constant refining. And then when you continue to actually refine, all of that leads back into actively trading, and then it's one big circle. Now that you have the foundation, all you're simply going to do is build your playbook. You're going to build your playbook, and then you're going to input all of that data into your journal. Once you analyze and look at the performance that's being told in your trading journal, you're going to then refine where you're lacking, and then it's all one big circle. And that doesn't necessarily just include like looking at the mistakes you're making on a daily basis, like over trading, over leveraging, not following your rules, FOMOing in or out of positions. So this is just the overall structure of building a playbook. Now, when it comes to a trading journal itself and how you should be improving and using a trading journal to its effectiveness, really to give you guys just some really quick pointers that I look at on a daily basis when it comes to my trading journal is, am I over trading? Am I oversizing? Am I trading during my trading times? Am I making any bad mistakes over the last few days that is reflecting in my current trading? And if so, how much money has those mistakes costed me? And let me cut off those mistakes and avoid making those same mistakes again in the future. Really quick, this is going to be for all of the traders who are skilled in the markets. We are actually hosting a trading competition. It is a completely free to enter competition. For those of you guys that want to take part of this trading competition, all you simply have to do is head over to leveleduptraders.com, and you will see on the dashboard after you sign up a competitions tab. Now, when it comes to this trading competition, the rules are very simple. There's going to be 7 winners. First place winner is going to get a free $200,000 trading challenge, where if you move over to the funded stage, you will be trading real funds, not simulation. The funded accounts are actual live accounts, so it is a huge bonus. So you do get a 200K regular challenge plus $1,000 of cash. You guys can see the rest of the winnings here, along with the actual trading rules themselves. So we're going to be closing off the competition 3 days from when you guys actually see this video. The competition will be 2 weeks long. So if you guys think you have what it takes to not only win this competition, but get paid to actually win this trading competition, then just simply go over to leveleduptraders.com. Make sure you guys sign up and get started trading right away. And like I said, it is completely 100% free to enter. But other than that, everybody, I just wanted to give you guys some quick pointers on things that I did to simplify my trading overall, because at the end of the day, once you have this built out, it's really simple. You're just doing the same thing over and over again on a daily basis and entering the same criteria and entering the same rules and entering essentially all of the information into your business plan is what it is at the end of the day. So you can go back, refine, review, and improve. That's what trading is at the end of the day. Other than that, everybody, if you guys are interested in working one-on-one with me, make sure you guys click that very first link in the description. And if you guys enjoyed this video, make sure you guys like, comment, and subscribe, and I'll see you guys in the next one.